Deputy Richard Clarida joins Bloomberg later on today. Credit Suisse tightens financing terms for hedge funds and family offices, as you would expect, amid the Archegos blow-up, and avoiding banker burnout. Barclays plans to limit working hours to cut pressure on staff. Junior bankers at Bank America will get a pay rise. Let's take a look at futures. Just 10 seconds here to go. UK futures are up 0.25%. The FTSE has had a great week. The continental futures are all in green territory, but not doing a heck of a lot this morning. Let's take a look as the market opens at the global macro movers screen. It shows a series of risk assets. Equity indexes are in your left-hand column, and it will populate as they open up. The FTSE always the first out of the gate, up 0.1%. Let's wait. Usually the IBEX comes next. Then you get the CAC 40, the AEX, and the FTSE MIB, all typically before the DAX. It takes the DAX, well, of course, when I say that, the DAX just pops out. In any case, not terribly exciting. Unchanged in Germany, unchanged in Spain, unchanged in London, and the CAC 40 now up 0.1%. It's a gray day in markets, but there's actually so much going on, I promise. Over in the U.S., the dovish tones continued from Fed Chair Jay Powell. Speaking at a virtual IMF panel, he downplayed the risk of inflation and pledged to get the U.S. back to a great economy. But Powell added that the recovery remains uneven and incomplete.
We got a taste of what faster progress will look like with the March employment report, close to 1 million jobs, particularly if you add in the revisions for January and February. And we want to see a string of months like that so we can really begin to show progress toward our goals. The recovery, though, here remains uneven and incomplete.
Joining us now is Mike Bell, JP Morgan Asset Management Global Market Strategist. And Mike, on the MLive blog this morning, I saw a really fascinating post from Wes Goodman saying the bull run has years to go, and the reason is that baby boomers, rather than going into bonds, have stayed in equities or re-upped in equities and now own 30% of corporate America. Basically, the argument is that the Fed can't afford to let the markets fail. The famous Greenspan put, or infamous Greenspan put, is alive and well. Do you agree?
Well, I agree that we've probably got several years for this bull market to run. Maybe not necessarily for that reason, but I mean, I think the main reason is that history tells you that you want to be invested in equities unless you think there's going to be a recession in the next 12 months. And I think contrary to that, growth actually looks like it's going to be pretty spectacular. And we talked about the Fed just now. I mean, maybe the Fed hike rates in 2023, but even so, if they hike, say, 4 times in 2023 in the most aggressive scenario, and then 4 times in 2024, which is not what I think is the base case by any means, but probably the most aggressive kind of realistic scenario, then, you know, maybe that causes a recession sometime in 2025. But on the view that you don't want to sell equities until at least a year before that, it does suggest that we've got really quite some way of rising markets ahead of us.
On the other hand, Mike, here in the West, there are a number of industries, for example, airlines, where getting back to pre-pandemic levels is still going to take years. And if you look globally, Bloomberg had a great story a couple days ago about the shrinking middle class. For the first time in basically 3 decades, the global middle class dropped 150 million members. This is going to have, this pandemic, long-lasting implications for sub-Saharan Africa, for large swathes of Asia, and we were counting on those people to buy stuff. Isn't that a concern?
Well, I think that's obviously been caused by COVID, but if you look at the projections for the middle class over the next decade, in Asia, for example, we forecast that you're going to see a 1.2 billion increase in the middle class. A lot of that's going to come in India, where you've got very favorable demographics. You've got 480 million people in India who are under the age of 20. And as they come into the working age population, they're going to be new consumers, which we think is a very exciting growth opportunity.
All right. And I think India, especially the last few days, we've had a lot of stories out of India, really fascinating, because they're starting to kick up their vaccination rate. Now I think it's 3.5 million. Of course, that doesn't really dent the massive population, but maybe within a year, they will have vaccinated enough people to get back to herd immunity. Mike Bell, JP Morgan Asset Management, global market strategist, stays with us. We do have a lot to talk about today, even though it's Friday and the equity indexes aren't moving around that much. Remember, we're still at record highs, and we've got, on the one hand, some very bad news coming out of Europe when you look at industrial production figures. On the other hand, some very good news coming out of the heart of Europe, the economic growth engine here in Germany. There may be a drive to actually get some vaccine doses and pick up the pace a little bit in terms of tackling this disease. We'll get the latest from here in Berlin next. This is Bloomberg. welcome back to the European Open. We are 8 minutes into the session right now, and we're seeing not a lot of movement, although it is kind of to the downside now. The DAX, the FTSE, and the Stocks Europe 600, the broader benchmark, off about 0.1% in terms of the indexes. Let's take a look at what the individual movers are this morning. For that, we go to Bloomberg's Danny Berger in London. Danny?
Matt, certainly one of the big ways to the downside is going to be TUI today. It is the biggest loser in the Stock 600 so far this morning. A new convertible bond offering. It gives them more liquidity, but of course, with more supply comes a lower price for TUI share prices. So those down more than nearly 5.5%. Atlantia, one of the movers to the upside. ACS, the Spanish construction company, confirming that they have sent a letter to Atlantia expressing interest in their domestic highway unit. They just want a stake, but in total, 100% of the highway unit being valued at about 10 billion euros. Those shares more than 2%. Finally, ASMI, we talked about this in the pre-market movers, but chip companies, the ones to keep your eye on today, especially suppliers to TSMC, because they reported a third quarter of record sales. Next, the macro picture. I do want to kick us off by looking at what happened with the CSI 300 today, because it did drop. We have those embers of inflation concerns starting to emerge from China with better than expected PPI and CPI. So we're seeing U.S. 10-year yields up higher, yes. However, when you look at the move at S&P 500 futures, barely up, just flat, it is still a picture where investors are getting more comfortable with higher yields, perhaps because of more growth. Powell, of course, remaining dovish, that Goldilocks, not too hot, not too cold type of economy. So yes, large cap tech is down today, but this isn't as much frightened over inflation as perhaps we would have seen a month ago, Matt.
All right, Danny, thanks very much. Danny Berger there, looking at the market moves for us. Let's focus in, though, now on Europe's vaccination campaign. The rate is improving in Germany after the Easter holiday. 819,000 doses were delivered yesterday. That's on par with the UK. But according to our vaccine tracker, it'll take another 10 months to reach herd immunity in the population here in Germany. Joining us now for more is Agatha Cantrill out of Bloomberg. Aggie, is Germany's target of giving everyone a vaccine invite by the end of the summer even feasible? I mean, can we get the doses here?
It is still going to be a massive effort to step up Germany's vaccination campaign if Merkel wants to hit the target that she set herself of the end of the summer, which officially obviously ends on September the 21st. But allowing GPs to now get involved with the vaccination campaign that only happened after Easter is really going to help it. And as we saw on Wednesday, there was a massive uptick in the amount of vaccinations taking place in the country, which a lot of people are attributing to allowing general practitioners to get involved in the vaccination campaign, whereas before it was only being done in designated vaccine centers.
So I was really shocked when I got your email a couple of days ago pointing out that Soder had signed a deal for pre-orders of the Sputnik V vaccine. I mean, for one thing, it seems like this leader, who may be a chancellor candidate, was breaking from the rest of Germany. For another thing, he's breaking, in a sense, from Europe. And then for a third thing, he's going to a man for the vaccines that President Biden called a killer. But I guess that's how desperate the situation is.
Well, yes, but I think also there is definitely going. He made this pre-order that is obviously still contingent on approval in the EU, and I think that the thing now is to look at whether the EMA, the European Medicines Agency, is actually looking at the Sputnik vaccine as an option, but is obviously making sure that it goes through the approval processes that all the other vaccines have done. And so they're expecting that vaccine process might need to take another couple of months. 3 or 4 months was what Bloomberg in Brussels has been reporting. And if that was the case, then it may be that while Soder has made this deal, it may not even be necessary to take on those vaccines when they are delivered in July.
All right, very interesting stuff. Aggie, thanks very much. Agatha Cantrill covering everything for us here out of Berlin. You know, one thing that I found fascinating, Francine told me the other day, it's actually Sputnik V. I thought it was Sputnik 5, you know, as a tribute kind of to the space program, but apparently it's Sputnik V, V for vaccine, maybe V for victory. A very interesting debate there I've seen on the internet. Mike Bell, JP Morgan Asset Management Global Market Strategist, is still with us. And Mike, I wonder how the sloth of the vaccine rollout here in Europe, especially compared to the US and the UK, affects what you do every day.
Well, I think it's been responsible for some of the euro weakness and hence dollar strength that we've seen. But I do think that in the second quarter, we're going to see quite a ramp up, as you were just discussing, in terms of vaccine rollout in Europe. And as that gap between the US and Europe vaccination rates closes, that could potentially provide a bid for the euro. So I think that's one element of it. Of course, it's also relevant for European equities. But it's been noticeable, I think, how European equities have done really quite well, despite the fact that we've seen the lag on the vaccine rollout. I think that's been because of the boom that we're seeing in global goods demand, which is obviously something that plays well for European exporters. But you may start to see a bit of a rotation into more of your domestic focus names in Europe, as opposed to the international export focus names.
You know, we saw a couple of days ago the UK say under 30s can no longer get AstraZeneca, or at least they're not recommending it for people under 30. Is that the reason we saw all of a sudden some pound weakness versus the euro this week? I mean, the euro had been trending down against sterling, and it just kind of turned around. We have a pretty cool chart. I've been showing it this morning. I'm not asking the control room to pull it up now, because that would be insane to sort of demand that out of the blue. But it's pretty dramatic. Is the vaccination issue really driving market assets so strongly?
I mean, in my opinion, the truth of the matter is that the under 30s are so unlikely to end up in hospital and certainly very unlikely to die from COVID, that it's less important really what happens on the vaccination for them, because you could realistically reopen the economy even without the under 30s having been vaccinated. And I don't think you'd get to the point where you had to shut the economy down again because of hospitals filling up. So I don't think it's that relevant. I think what the most important thing in the UK really is that the progress on vaccinations for the age groups which are very vulnerable to ending up in hospital where they catch COVID has been so fantastic. And we've seen this really quite incredible progress, really, which means that cases are remaining low. But even if we see cases start to pick up as the economy reopens in the coming months, I think one has reasonable reason to be optimistic that that won't be followed by a significant pickup in hospitalizations.
Mike, is there a trade that gets you pumped in the morning? Is there an issue right now that you're really psyched on in terms of an investment that you could share with the rest of us?
Yeah, I think Asian equities look very attractive. If you think since mid-February, Chinese stocks have sold off a fair amount. So I think at these kind of levels, they provide a pretty attractive entry point for long-term investors. We think that China's going to grow at about 4.4% on average in real terms over the next decade. So that's quite a lot lower than it has been over the previous decade. But nevertheless, it means that China's economy is going to be about 50% larger in real terms by the end of 2030 compared with where we are today. And I mean, that's about a $7 trillion increase in spending, which, you know, to put in perspective, is about the current size of the UK and German economies combined being spent each year by 2030, more than is currently the case. So we think that that Asian opportunity, and I mentioned India earlier as well, we think they'll grow at 6.9% over the next decade, so approximately doubling in 10 years. So that's really, given the valuations, particularly that you see in China trading on a P of only about 15.5, it looks quite attractive to me.
Yeah, very cool, and we're paying close attention. Great for you to confirm our interest there. Mike Bell, thanks so much for joining us. JP Morgan Asset Management, global market strategist. He's going to continue the conversation with us on Bloomberg Radio at 9 a.m. UK time, so you can just tune in there, especially if you're in London using DAB, digital radio. Coming up, is God bad at banks? Wall Street tries to improve work-life balance for junior bankers as the Archbishop of Canterbury weighs in. More on that next. This is Bloomberg. I feel weird having said that. Is God...
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Welcome back to Bloomberg Markets. This is the European Open. We are 20 minutes into the session, and we're seeing red arrows, drops of 0.2% on the FTSE and the DAX. So European equity indexes, well, the FTSE had been doing well this week, and I guess taking a little bit of a pause today. Let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Amazon has taken a strong lead in an historic election. The vote will determine whether workers at a company warehouse in Alabama will become the first in the U.S. to join a retail union. With about half of the votes counted, Amazon is ahead by a 2-to-1 margin. The Retail, Wholesale and Department Store Union calls the system broken and says it will appeal. Abu Dhabi's Mubadala is said to have started preparations for a U.S. IPO of chipmaker Global Foundries. The Sovereign Wealth Fund has been having initial discussions with potential advisors about a listing that could value the business at about $20 billion. The biggest landlord in London's Canary Wharf financial district is considering scrapping a new office skyscraper and instead building a 60-story apartment block. Canary Wharf Group already has permission for a 1 million square foot office building, the equivalent of 2 Gherkin towers. Broker Carter Jonas says advertised
doing
office...
okay today. Straight away, back to business. I'm going to place an order to sell short euro The price I'm looking for, 118,975. Okay, I'm looking to sell at 118,975, just right here. So if you're looking to sell short euro, please place an order and then stay with me, and we will complete together this trade. We'll make a profit on it. Okay, if you want to get a strategy, you can get it from our website, company.co.uk. We still have places available for 15 minutes sessions. That's free. You don't have to pay anything at all. So you're welcome to register at our website, or you can find banner on our streamer. Okay, speak to you later.
Friday nights late or Sunday mornings early, and Bank America is raising wages there. Joining us now for more on that is Tom Metcalf from our banking team. So Tom, what's driving this? Is it really the Archbishop of Canterbury who's telling Jes Staley how he should run his business?
Yeah, well, it's certainly true that a lot of folks you wouldn't normally expect to be opining on something like this are definitely getting interested. So, I mean, it's a perennial topic in banking, and I guess the reason it's been particularly high profile recently is probably with the pandemic. I think a lot of these more junior bankers are finding it extremely hard to sort of switch off. I mean, you know, as that Goldman deck suggested, that, you know, they might be literally going to bed for a few hours and then straight back to their screens, and, you know, just doing that for 20 hours every day, week in, week out. And I think after about a year of that, you know, the cracks are starting to show. So there's that kind of pressure from within. And then obviously, yeah, when you have someone like the head of the Church of England weighing in, I think a few CEOs are probably starting to take notice as well.
The pressure from within doesn't get to be blown off also is something that I've been hearing from a lot of bankers. Like, you know, in the past, they were working these insane hours as well. They did this last year, they did this 10 years ago, they did this 20 years ago, but they all got to go to the pub with the other junior bankers and kind of blow off a little bit of steam. That kind of social aspect is missing, and maybe that's why, at least this is what people are telling me, it's been highlighted this year. Are you hearing that as well?
Yeah, no, absolutely. And it's kind of an interesting thought, really, because, you know, that may well be why you have seen folk like David Solomon of Goldman saying, you know, he's keen to bring everyone back into the office. I think there's a recognition that, particularly for some of these kinds of work, you know, right now, I think a lot of the analysts are kind of just getting the negative side of it and not able to sort of get the, you know, comradeship or sort of the social aspect that at least.
Okay, traders, position close. Sorry, open position. We didn't close yet. We open position at 118,975. That's a short position. All of you who decided to trade euro, you're in. So stay with me, and we will go through this trade, and I'll let you know what's going to happen next, when we're going to place stop on profit, or when we're going to add another pair, another position for euro. Okay, well done, guys. Yesterday we did quite a good trade on euro, so hopefully today it will be even better. Stay safe.
That Norway sells way more electric cars per capita than the US? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric. Last year, Norway became the first country in the world to sell more electric cars than any other.
In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Open. We are a half hour into the session right now, and we're looking at a FTSE that's off almost 0.25%, a DAX that's down a little bit more than 0.25%, the CAC 40 little changed in Paris. Let's take a look at which sectors are on the move on the broader Stocks 600 benchmark itself down a little bit more than 0.1%. You see consumer products, and is it consumer products and staples? I never get the letters right. Ever since S&P went to abbreviations, I'm not 100% sure, but I'm pretty sure that's a staples thing there. Then industrial goods and services, construction materials, all down, or all up, I should say. On the downside, insurance, personal consumer drugs, and grocery stores are gainers as well as losers as well as telecoms. So a real mixed bag today in terms of what we see moving on the GRR. Let's get to the Bloomberg First Word News. Laura Wright, save me in London. Laura.
Anytime, Matt. So UK Chancellor Rishi Sunak is under pressure after revealing he pushed his officials to consider helping Greensill Capital following a request from former Prime Minister David Cameron. According to text messages released by the government, Sunak told Cameron he'd asked his team to look at ways to give Greensill access to the state's pandemic corporate support program last year. Sunak maintains he followed all the correct procedures. More uncertainty for the UK travel industry. The Department for Transport says COVID testing and quarantine regimes will be compulsory according to whether a foreign destination is rated green, amber or red under a new system. But the government says it's too early to say which nations will fall into what category or whether travel will resume in mid-May or at a later date. The UK has granted asylum to Hong Kong pro-democracy activist Nathan Law, a move likely to fuel tensions with China. Law fled to London last year after Beijing introduced sweeping national security powers for the Hong Kong government. Beijing accused the UK of sheltering wanted criminals. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Mad.
Laura, thanks very much. Laura right there in London with your First Word News. Now, Credit Suisse's former CEO said the bank should not be judged on the Archegos fallout alone. Brady Dugan, who ran the lender from 2007 to 2015, cites the company's past successes in risk management, including during the 2008 financial crisis.
It's clearly, the issues around risk are extremely important. They take a lot of focus. large financial organizations are complex. And so, clearly it does take a lot of focus. It takes people who really understand the business and are focused on it. And yet, as you mentioned, with large complex organizations, it's not unique that these issues come up from time to time. And I would say, as you say, on Credit Suisse, I'm not involved in it. I don't know any more than a man on the street. And obviously, I'm a big booster of Credit Suisse as well. So, I have a perspective on it. And I do think, they have great businesses, great franchises, a lot of great people. I think that, clearly you kind of have to put that in perspective. But it definitely is it's something where you also have to have really the DNA and the approach within the organization. And I would point out, for instance, at Credit Suisse, you may recall, through the financial crisis, 2008, Credit Suisse was one of the banks that did not have any government bailout and was considered to have managed, one of the best through that crisis. So, there is a lot of good DNA around risk management there as well.
I was actually going to mention that because you did manage Credit Suisse.
Okay, guys, we're going to play stop and profit for euro. The price I'm looking to place 118.955. As you can see, this is as simple as that. This is all about small profits, relatively small profits, but you will do it constantly, every time on different pairs. This way you will make a profit by day trading. You don't have to wait until it will double in price or triple in price. Small profit, this is enough, and move on. Small profit, this is enough, and move on. So right now, we have 2 pips in profit. In our case, it will be £200, but it's not yet. We didn't tilt yet. So if it moves lower, we will exceed. We will put even higher stop on profit. So we will try to make as much as possible from this trade and from our position. So if you decided to follow this trade, please do so, and please place stop on profit. And whatever happened, as I always said, you will not end up in loss. Good trade. Well done, guys, all of you who decided to place this trade.
Remember that swaps are
you're already in profit.
To get leverage that at the low end of estimates was as much as 5 times leverage, and estimates do indeed go much higher than that. He didn't have the collateral when those margin calls came. So in order to rein that in, what Credit Suisse is doing is for their hedge fund and family office credit clients, they're no longer having static margin requirements. That means they're no longer going to say, okay, give us this fixed amount, and in return, this is the exposure you can get in terms of size of positioning or account. Now it's going to be dynamic. So they're going to look at the risk of the underlying positioning itself, be it volatility, be it concentration, and that will dictate how much collateral they have to put up. In all likelihood, this will lead to just more collateral required by clients and potentially lower profitability if it means they get less access to leverage.
All right, so what other areas is it possible that we're going to see reforms in? I assume that, regulators are going to be looking hard at family offices, but also on the banking side.
I think that's totally right, Matt, and I think that's part of the reason why we can't necessarily just yet write this off as just a Credit Suisse story, because if regulators are looking into this, this could be a harbinger of something the entirety of the banking industry is perhaps going to have to enact. And when we think about things regulators have looked at over the past few months, they've issued warnings about SPACs, they've issued warnings about CLOs. These are 2 areas which Credit Suisse is highly, highly involved in. Sure, it doesn't have any ties to Archegos, it doesn't have any ties to Greensill, but there are other areas of risk that Credit Suisse perhaps will have to re-examine. Of course, the new chair comes in, assuming he is voted in at the end of this month. Thomas Gottstein has said that he will bring in a review of their strategy. So, there are potentially other places that Credit Suisse could be looking at to reform at.
All right, Danny, thanks very much. Danny Berger, continuing to cover the Credit Suisse Archegos saga for us. It's now been 2 weeks since that story broke, and the cover of Bloomberg Business Week really breaks down Bill Wang who ran Archegos, in terms of, who he is and how he acquired so much leverage, his successes, and his gigantic failure. I highly recommend reading that, and then probably being done with the Archegos story, because I'm sure you've heard quite enough. Coming up, demand for chips is surging, but so is the industry's environmental impact. Each new generation of semiconductors requires more energy, water, and greenhouse gases to create. We'll look into that story next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Welcome back to the European Open. We are 41 minutes into the session, and we're looking at kind of a soft day after, the FTSE's had a great week, especially compared to the softness that we've seen on the continent and in the U.S. Now it's sort of taking a breather here, down 2/3, almost 1/4%. The DAX is down almost 0.2%. So we're down a little today, but of course things could change on a dime, given we're all watching the Fed so closely. Federal Reserve Bank of San Francisco President Mary Daly remains bullish on a rebound for the U.S. economy, but warned there is still a long way to go before the recovery is complete. She spoke exclusively to Bloomberg's Kathleen Hayes about the risks on the horizon despite stimulus.
I had penciled in a little more stimulus than the Board of Governors staff, as you've referenced, and expected that to be a lift to the economy. So overall, it materialized in the way that I more or less expected. And overall, I haven't really changed my outlook. The truth of the matter is that the fiscal stimulus, along with the extraordinary measures that the Federal Reserve has taken, along with getting COVID behind us a little bit and moving into a light at the end of the tunnel scenario, we really are seeing a lift to the economy that is positive and most welcomed.
Well, and certainly the jobs report, just about 1 million net new jobs added, and many economists are saying probably another 1 million in the next month and maybe after that. When you look at that, does the economy maybe start to look not just, maybe not better than you hoped for, but better than you were actually forecasting and looking for?
So I've been pretty bullish on how the economy initially starts to rebound. If you think back to last summer when we were able to get warmer weather and get COVID to subside a little bit, people were eager to come back out. Consumers wanted to spend. People wanted to open up their businesses. And so that really caused a burst of activity, both in terms of output, but also in terms of employment. And I expect that sharp rebound to also take place. It'll take several months of millions of jobs, though, at the jobs report to get us back to full employment and back to a point where we can say that we're fully behind the economic impact of COVID. So I'm bullish on the rebound, but I know we have a long way to go before the job is complete.
What's going to make you, I mean, is there anything happening now that if it continues, would you say, you know, I wasn't going to change my dots back in March, but boy, oh boy, it's looking good enough. And this will be a good thing, right? If people at the Fed say, yeah, we can move this up a bit. Is there something you've seen lately, if it continues, would make you think at the next meeting, I guess the dots will be again in June, that it might be time just to alter that a bit?
Well, I see the economy is really shaping up in a positive way. And so relative to, say, December of 2020, I'm much more bullish now than I was then because we've had a very successful, after a slow start, a very successful vaccine rollout. We see people wanting vaccines, able to get them now, and that permeating across the country and across all age groups. So that's a really important development. The COVID numbers have been getting better, not worse. So those are important developments. So those have all boosted my outlook, and that was reflected in my positivity in the March meeting, of course, and going forward. For there to be more than that, I don't foresee that. We already have some indications that there are risks on the horizon in terms of some hotspots of COVID. And they're just reminders that the virus is not fully behind us yet. And while I'm very optimistic and very bullish, I do actually have a note of caution. As goes COVID, so goes the economy. And while we're getting closer and closer to having this fully behind us, we do have the last mile to earn and to get to. And so I haven't lost sight of that.
That was San Francisco Fed President Mary Daly talking to Bloomberg's Kathleen Hayes about her outlook for the U.S. economic recovery. Now let's get the Bloomberg Business Flash. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Amazon has taken a strong lead in an historic election. The vote will determine whether workers at a company warehouse in Alabama will become the first in the U.S. to join a retail union. With about half of the votes counted, Amazon is ahead by 2-to-1 margin. The Retail, Wholesale and Department Store Union calls the system broken and says it will appeal. Abu Dhabi's Mubadala is said to have started preparations for a U.S. IPO of chipmaker Global Foundries. The sovereign wealth fund has been having initial discussions with potential advisors about a listing that could value the business at about $20 billion. Barclays says junior bankers should never work after 9 p.m. on a Friday or early on a Sunday morning, except when they're staffing live deals. The London-based firm says it's reworking its policies with the aim of protecting younger investment bankers' mental health. Amid a boom in deals, Barclays and its rivals have been trying to address increasing burnout among junior staff. That's the Bloomberg Business Flash. Matt.
All right, Laura, thanks very much. Laura right there with your Business Flash out of London. Demand for semiconductors is surging as all parts of life become more digital. In recent months, chip shortages have been front and center in concerns over global supply chain. Shortfalls have been felt in industries ranging from tech, obviously, to automakers, maybe a little more surprisingly. But our reliance on these chips has also raised concerns over the industry's environmental impact. The producers, TSMC, a leader in the industry, has now overtaken General Motors in terms of some carbon emissions, and U.S. chipmaker Intel isn't far behind. Joining us now is Bloomberg's senior editor Alan Crawford from here in Berlin to talk about this story. Silicon Valley makes a lot of its sustainability, makes up a lot of its sustainability. How big of an issue is climate change for the semiconductor industry, Alan?
Well, there's just one statistic for you, Matt, that TSMC, as you mentioned, that's the world's largest contract chip maker. They make the world's most advanced chips for Apple, for example. It's in your iPhone. They account for around 5% of Taiwan's energy consumption. I mean, it's a vast amount. They're reckoned to have an electricity bill of about $1 billion. And that, it gives you an indication of the size, of the amount of power that they're consuming. And in general, information and computing technology is reckoned to account for something like 20% of the world's total consumption by 2030. And of that, it's both hardware, making hardware, and also running a computer, you know, the electricity that you use. But the bigger part of that is hardware, and it's chip making. And so that in making chips, it uses an awful lot of electricity. I mean, there are huge machines, it's automated process. They use an awful lot of water, and they emit greenhouse gases. And the thing is that the more advanced each chip gets, the more of these dirty, polluting materials that they have to use.
To be honest, there's, I think, a lot of comparisons here, fair comparisons to mining Bitcoin. And one of the things that Bitcoin miners have done as they receive more criticism about the electricity usage it takes to mine is move to places where they have access to nuclear power or sun or wind power in order to reduce their carbon footprint. What are the big chip makers, TSMC and Intel, doing about this?
Well, I mean, Apple, for example, that's driving a lot of the change in the industry. That they've committed to be carbon neutral by 2030, and companies can do things to tackle their direct emissions. You know, for example, they can cut down on company travel. And they source their power from clean energy. But the trouble is that they also have to deal with their indirect emissions. You know, this is all part of ESG reporting nowadays. And so that means that they don't have to pass it down the line. So companies like TSMC that are making chips for Apple, they just bought the entire output of an offshore wind farm that's yet to be built. Samsung, that's the other major chip maker at the leading edge. They're using geothermal power for their plants. But it's still, they acknowledge they still have a long way to go.
All right, very interesting story, Alan, and it raises, I think, also a lot of questions. For example, if these chips go into products that clean up in some ways the environment, is the trade-off worth it? I don't know the scale of each of those two problems, but Alan Crawford is a senior editor at Bloomberg writing about the carbon footprint of the chip industry increasingly growing. Coming up, Germany and France see unexpected declines in industrial production, and they are big as coronavirus restrictions increasingly harm parts of the economy that have so far proved resilient. We'll discuss that next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session now, and the FTSE is down about 0.3%. But as I continue to remind you, it's had a good week, and we don't see a lot of movement elsewhere in equity indexes. Joining us now is Laura Cooper, Bloomberg's MLive macro strategist. Actually, Laura, even though we get to or near record highs in almost all equity indexes, we haven't really seen a lot of big swings this week. It seems like volatility has kind of come out of this trade.
Well, and it's really been quite a quiet week. We did have this holiday shortened week in Europe. We really...
Okay, guys, this is it. This is what it's all about to day trade. You just complete your trade. For some of you guys, you just complete your first trade and you made a profit. Well done. Great. Great trade. And in our case, we made £200. In your case, it's how much broker pays you per pip. Okay? This is where we closed. It took us just probably half an hour to complete this trade. Great. Well done. Let's move on to next pairs.
Inflation is coming. It's not a scare. We just got a confirmation out of China. We had so much data already out, right? This week we had incredible PMI data after the jobs number on Friday. We had the IMF meetings in Washington, the Fed minutes, and then every single Fed governor has spoken. Like, what's not to move markets? It should be some crazy volatility. In any case, where do you see movement? I've noticed gold had been rising a lot this week. I noticed the FTSE had been rising a lot this week, but both of those have turned around.
Well, and those two factors that you mentioned, so gold has been supported by the fact that we are seeing yields on the back foot. We did see the dollar come under pressure after that exceptional quarter, so that's really providing somewhat of a tailwind to gold, reaching that 1750 mark after falling the week prior to the lowest since last June. And then, like you mentioned, the FTSE 100, we have had that boost from a similar story, with the dollar gaining ground against the pound. We have seen that provide some lift there. So again, likely trends to change next week when we get more of that U.S. data.
Maybe I missed my entry points there. Laura Cooper, thanks very much. Bloomberg's MLive macro strategist. That's it for EMO. This is Bloomberg.
travel minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
A taste of what faster progress will look like with the March employment report.
We really are seeing a lift to the economy that is positive and most welcomed.
We just need to keep reminding ourselves that even though some parts of the economy are just doing great, there's a very large group of people who are not.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the early edition on this Friday, the 9th of April. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Credit Suisse tightens the rules while the Swiss lender switches things up as it moves forwards from the Archegos saga, changing its margin requirement for swaps. Jay Powell is more worried about the virus than rising prices, while markets struggle for direction as Chinese data contradicts the Fed chief's lack of concern for inflation. And as Europe's central bank urges the EU not to delay with pandemic financing, we speak with the governors of the Bank of Italy and Greece and the former ECB official Lorenzo Bini-Smacchi. Now, first, though, to the markets, and stocks are set to end the week near record highs as the dovish comments from Jay Powell continue. Now, at the same time, more signs from China are emerging today that inflation is actually also on the rise. So let's get straight to these two top stories on the markets with our Danny Berger. So, Danny, how do you reconcile the two? China seems to be a lot more worried about inflation than the rest of the world.
Yeah, and look, I think to some degree that's fair because, yes, sure, prices are picking up, but perhaps the idea in the U.S. is people already knew this. So it doesn't necessarily mean that we're going to see more inflation than we expected before, but it just sort of confirms the picture we already know. But at the same time, it did definitely give us this tone of the burning embers of inflation. I mean, look what happened with the CSI 300. This is the closing price for today, down 1.5%. But I think one of the more remarkable things when you look at that picture, that means yields are higher, is the resiliency we're still seeing from U.S. equity markets. Futures are up when it comes to the S&P 500, NASDAQ unchanged. Francine, if this was a month ago, it would have been a very different picture of a pretty steep sell-off from the inflation picture. Let me take you into my terminal because I want to really illustrate what I'm talking about when I say that the U.S. inflation picture was already headed that way. So we get this PPI and CPI inflation picture. And so if I can I'll take you to the charts in just a moment, but you can really see that that's the way the U.S. was going anyway. And look, that does mean that volatility has been pretty low in the U.S. So here it is, China in blue, U.S. in white here. So look, this direction, it's not surprising. Volatility, because of this, we've seen the VIX trade at its lowest level since February 2020. So there doesn't seem to be a lot of fear that this will ripple into the stock market as perhaps it once did. One caveat to this is yesterday we saw these really massive block trades for VIX calls. In other words, predicting that volatility would go higher. So yes, the VIX overall is low. Investor sentiment, the latest AAII survey survey was the most bullish since 2017. But still, Francine, plenty of people out there willing to bet that this picture will change.
Yeah, many people are betting that. Danny, thank you so much. Danny Berger there with the latest moves on the markets. Now let's talk about the European Union's recovery. Euro area leaders are growing concerned about the pace of the bloc's economic recovery. Well, earlier this week on the program, the French finance minister Bruno Le Maire expressed anger about the slow rollout of the EU's €750 billion recovery plan.
I'm deeply concerned by the delay in the implementation of the European recovery plan. That's the key point.
This morning, the ECB Executive Board member Isabel Schnabel warns that a challenge of the recovery fund at Germany's constitutional court could actually end up having grave consequences. Now, she told Der Spiegel that if the rollout of the funds were to be delayed indefinitely, it would be an economic catastrophe for Europe. Well, I'm delighted to be joined now by our interview of the day, an exclusive conversation with Ignazio Visco, Banca d'Italia governor, and Isabel Schnabel's colleague, of course, on the ECB Governing Council. So thank you so much, Governor, for joining us. A lot of talk, of course, at the IMF. It's the third time that the IMF is meeting virtually. The focus is on a better recovery overall, but how worried are you about Europe?
Well, first of all, good morning. Secondly, I think, well, these meetings have been pretty interesting in the sense that two messages have come out. The first is that the global economy is starting really to recover. And secondly, however, that this upturn remains fragile, which is subject to a very high uncertainty, especially related to the uneven pace of vaccination across areas, countries, regions. And this is one of the main concerns that came out from the meetings.
And your take on Europe, do you worry that actually Europe is falling behind? So since the meeting of the ECB last time, of course, things have changed. There's more of lockdown, and now there's concern about the disbursements of the recovery funds.
There are two issues here. One is the emergency. We are still in an emergency situation, and there are certainly in continental Europe delays in vaccination, which is the main reason for both the difficulty in recovering and the slow pace, I would say, at which the population is reacting. My impression is that this recovery fund is crucial. It is certainly, it has a medium-term orientation. In the meanwhile, we have a substantial amount of measures being taken on the fiscal front by all governments in Europe. So we are emphasizing the differences with the United States because in the United States, this Biden fiscal plan is really impressive, but it is mostly direct transfers, as the direct transfers that are operating in all our countries are trying to cope with the necessities of the current period. But really, what is most important is to ensure that in the future years, months and years, clearly we will be able to accompany and maintain a stable recovery through investment in infrastructures and reforms, which is the object of this next generation EU plan.
But Governor, if there's a divergence between the stimulus in the US and the stimulus in Europe, how difficult does it actually make it for the ECB and European countries to get on a better footing because of market movements, because of treasury yield movements?
Well, first of all, I think that these divergences are to be put in perspective. Certainly, there is a major divergence in the pace of vaccination. And that is, I think, this is the crucial thing. I said recently that fiscal and monetary policy are crucial, but for the time being, what is crucial really is to accelerate the pace of vaccination. Actually, this is a global issue. It's not limited to Europe, and the divergences there are going to matter very much. So this is the first thing. Secondly, obviously, these movements in the United States are predicated in policies and in markets, are predicated on the fact that the recovery is coming up faster in the US, both as a success of vaccination, but also of the effect and the announcements of the measures being taken and being put in place. In Europe, I think we have similar measures. I understand that there is a concern that this recovery plan may take some time before being put in operation, but we have to emphasize that this is something that tries to cope with the very moderate rate of growth of our economies, which has been the concern, obviously, of the ECB in the last years. Demand is too low, and therefore demand is low for two reasons. But obviously it is not only consumption, it is also investment, and this is why these measures are extremely important.
But Governor, overall, so since the ECB met last, are risks to the downside because of slow vaccination, because of the lockdowns in Europe, or is it on the upside? Sorry, risks to the downside, so the situation is getting better simply because of the stimulus coming from the US?
Well, first of all, I think clearly the stimulus of this from the US is going to be very important. We are doing okay on the manufacturing side. We have a number of domestic problems. The sectors which have been mostly hit are accommodations, recreation, culture, and so on. Certainly in Italy, they are extremely important, and therefore there is a lot to be done on that side. But certainly the stimulus from the US is very relevant. I'm trying to say that we also have substantial fiscal transfers in place. We have really to understand how the future will change, and therefore how both the organization of work, production, and therefore policies have to change.
Governor, one reason why the ECB stepped up its bond buying program was actually, investors were thinking one thing, and if you looked at businesses and consumers, they just weren't as optimistic. Now we've had a good set of numbers in terms of PMIs and things like that. How much does it change your thinking about bond buying?
Well, I think yes, there is the issue which really have to consider is expectations about the future on the part of households, consumers at large. There is fears, and these fears have to be reduced. There is a need for intervention on the public sector side. Certainly, health infrastructures are a fundamental area where to invest or change. We are seeing an increase in savings, a substantial increase in savings, not only as a consequence of the lockdowns and the difficulty to spend, but also for precautionary reasons, jobs and security, but also fear of having to spend more for health reasons. And I think this has to be accommodated because scarce may be something that may make the difficulties long-lasting. So I think this is the area where confidence has to be restored. This is why also vaccination has really to be faster. We see the light at the end of the tunnel, but we have to find a way to accelerate the exit from the tunnel.
But so, Governor, so what does it mean for actually ECB policy? There, Classic Note was basically intimating that you should start discussing possibly winding down PEP in the third quarter. Do you agree with that? Is it too soon? Like, what's your thinking on the kind of timing that markets should be looking at?
Well, I think that really measures have to be maintained as long as necessary to err on the perhaps a little bit postponing the exit is less worrisome that winding down too early. We have a large number of small and medium firms which have been heavily hit. Most of them are profitable once things will return to some sort of normality. And we have to avoid really a sequence of insolvencies. As a matter of fact, up to now, things have been very positive, extremely limited number of insolvencies. Even the issue of zombification, as I said, is to be taken with a grain of salt, a real grain of salt. I'm much more positive on that. On the other hand, I would also think that we have to be very careful in becoming more selective as uncertainty is reduced and economic conditions, macroeconomic conditions improve.
Governor, thank you so much, as always, for giving us a little bit of your busy day. Ignazio Visco there, the Banca d'Italia governor and the ECB Governing Council member. Now, Smart Conversations on Bloomberg Surveillance, early edition. This hour, we have a top lineup. After hearing from Governor Visco, we also hear exclusively from the governor of the Bank of Greece. Should Europe be concerned about the country's debt again? That's later on in the program. But before then, we'll also be speaking to the chairman of Société Générale. He's also former ECB policymaker. He's Lorenzo Binismaghi. Now, if you have any questions for any of our guests, you can just IB plus TV Go. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UK Chancellor Rishi Sunak is under pressure after revealing he pushed his officials to consider helping Greensill Capital following a request from former Prime Minister David Cameron. According to text messages released by the government, Sunak told Cameron he'd asked his team to look at ways to give Greensill access to the state's pandemic corporate support program last year. Sunak maintains he followed all the correct procedures. Now, more uncertainty for the UK travel industry industry. The Department for Transport says COVID testing and quarantine regimes will be compulsory according to whether a foreign destination is rated green, amber or red under a new system. But the government says it's too early to say which nations will fall into which category or whether travel will resume in mid-May or at a later date. And the UK has granted asylum to Hong Kong pro-democracy activist Nathan Law, a move that is likely to fuel tensions with China. Law fled to London last year after Beijing introduced sweeping national security powers for the Hong Kong government. Beijing is accusing the UK of sheltering wanted criminals. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, the continued fallout of the Archegos implosion has put risk management in focus this week. The block trade saga could cost banks upwards of $10 billion, according to analysts, with Credit Suisse bearing the brunt of those losses. But the former chief executive of the Swiss bank says that it does have good DNA around risk.
Through the financial crisis, 2008, Credit Suisse was one of the banks that did not have any government bailout and was considered to have managed, one of the best through that crisis. So, there is a lot of good DNA around risk management there as well.
While Credit Suisse is now rolling out tighter limits for its hedge fund and family office clients, a potential sign of things to come for an industry still grappling with the blow-up of Archegos. Well, our next guest not only is a current chairman of one of Europe's biggest banks, back in the day he also worked at the ECB as a policymaker alongside Mario Draghi himself. He was a member of the executive board and governing council between 2005 and 2011. Lorenzo Binismaghi, chairman of Societe Generale, joins us now. Thank you so much, Mr. Binismaghi, for speaking to us. When you look at Archegos and what it means for banks, are we going to have more regulation? Have banks suddenly kind of, lost what it meant to have risky positions? What's the read across this?
Well, I mean, as a bank in continental Europe, one cannot be surprised by at least three things. First is the growth of so-called shadow banking. These family offices, hedge funds. Actually, one should be surprised that we are really surprised, because this trend has been going on for quite some time. And this maybe has been one of the areas where regulation and supervision has really not been that intense. The second is that the risk appetite of some financial institutions, global financial institutions, maybe has gone to levels that, seen from our point of view, seem really huge and difficult to justify. And finally, as you mentioned, the risk control, internal risk control and risk monitoring may need to be tightened. And this may be due to the huge liquidity available in the system. But as far as we are concerned, this phenomena seems really out of proportion compared to what we can do in Europe and what we want to do, actually, in terms of risk-taking.
But how can we be sure that there are no more Archegos out there?
Well, I mean, if you look at the size of the exposure and the huge risk-taking that has been taking place, I think that you need some institution to put their house in order. And the idea that you are safe because you may be able to get out earlier, maybe keeps you in a better position this time around, but it's not a good risk management technique to think that you can get out earlier than others.
So, Mr. Binismaghi, how could the financial calamity have been avoided? And actually, is it just wrong that some of these derivatives can be hidden from public view?
Well, I mean, so it's a very simple issue of the size of exposure. I mean, when you have this huge exposure, so individual institutions willing to lend so much money to one counterparty, there's something wrong going on there. I think it's a question of willingness to take risk that is not comparable, at least seen from continental Europe. This is, or at least the European Union. This is not is difficult to understand. So good risk management, I think good risk management should be the standard, and you cannot take exposures going to such levels.
Yeah, is there anything else do you worry about the financial stability actually of anything, given where we are in the markets, some of the market movements that we've seen, some of, what you're talking about, risk management? Is there something that makes you worry about this particular time frame that we're looking at?
I mean, to be frank, some volatility, as you were describing earlier, in the markets is good because it keeps investors aware. One of the problems when there is low volatility is that there is a tendency to consider that things are calm while they are not. Second, I think it's time for regulators to really look into shadow banking and not only talking about it, but really getting into the issue. I see that in the US, the Senate also has started to look at counterparty risk and how financial institutions are looking into that. But really, it's time to go a bit beyond, because the systemic implication of these huge family offices, hedge funds, and wealth managers, I think this is really having a systemic impact, and so we need international cooperation between regulators to address these issues.
Mr. Binismaghi, let's also talk about Lixor. So basically, with the sale now of Lixor, it means that you've exited the asset management space when so many of your rivals want to go heavy on it. Are you happy and comfortable with this decision going forward?
Well, Lixor, which was quite a successful brand, was too small within Société Générale, could not really grow as fast and benefit of its potential. Within Amundi, which is the first #1 asset manager in Europe, I think we are creating a true European pole, and we are giving a chance for Europe to compete with other big players, which are all North American. So I think this is a good choice for Société Générale, and it's a good choice for Europe.
Mr. Binismaghi, when you look at what Société Générale will become in 3-4 years, if we speak again, I mean, I'm sure we'll speak before, but in 3-4 years, what will your company look like?
Well, we like most banks, we're all restructuring some of the traditional banking areas, because simply, taking deposits in Europe with negative rates is not a very profitable business, and lending at these low rates is also not profitable. So the traditional retail banking is going to be dramatically restructured. The investment banking is also undergoing key restructuring because of the low volatility, because of the competition, because of the need also in Europe to get a higher concentration of these activities. And I think we need to grow, and these are our plans now, not only restructuring, but grow, allocate capital to more productive businesses, take into account, of course, technological changes, digitalization.
Thank you so much. We'll come back. Laurence Binismaghi there of Société Générale stays with us. We're going to take a quick break, and we'll come back in 2 minutes. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get back to Lorenzo Binismaghi of Societe Generale. Mr. Binismaghi, we're having a good conversation about some of the banks and some of Archegos and maybe some of the pitfalls to watch out for out there. Then we were talking about your bank, but how difficult is it to be a bank right now in Europe, given the size of the US? Do we need more consolidation in Europe just to try and compete with some of the big Wall Street giants?
I mean, in Europe, we have a few issues that the American banks do not have to deal with. The first is negative rates. That is basically a tax on the banking system. We have, at least concerning the major European banks, to still contribute to the European Single Resolution Fund. And this contribution is actually going up in the middle of the crisis, because it is calculated on the basis of the amount of deposits, and the amount of deposits in Europe have increased as a result of QE, the expansionary monetary policy led by the ECB. So it's a bit contradictory. You have expansionary policy on the one side that leads to more contribution by banks to the Single Resolution Fund. Of course, then you have an environment in Europe which has a slower growth. The yield curve is flatter. We also have a labor market which is different, and banks need to consolidate, and the consolidation is not necessarily that easy in an environment which is still fragmented. National regulation and the scope that national regulators still have within the European Union to prevent consolidation is still relevant. So I think we will need over the next few years to show that we can create European champions, if we can call them this way, that reduce fragmentation in Europe and can compete on the global scale. This I think will be an important objective also for European authorities, not only for the private sector.
But so how quickly do you think we could actually be able to have these, national European champions? I know there's a number of things that you were saying. Given the divergence of stimulus between Europe and the US, does it just delay that because it will take a longer time for Europe to get back on its feet?
I think the time now is to put our house in order in the banking system. Some are doing it quicker than others, but when this will be done, and we see the markets are reacting relatively well. In the first few months this year, the European banking sector has improved its position in the markets. We need also the regulator to put the banking system back to normal in terms of being able to remunerate capital. If all these things happen, I think within maybe 12 to 18 months, interesting things could happen in Europe.
And this would be interesting things like actually cross-border or first national? And where does Societe Generale fit in this?
Initially national. There are still countries where there are too many banks, too many small banks that are not sufficiently remunerative and not sufficiently profitable. And so consolidation will initially happen within borders still. I'm thinking about Spain, Italy, Germany. And then at that point, I think some European discussions will take place, but this will depend also on the attitude of national politicians. Will they still be very attached to having their, national banks, or are they willing to think European and to think global? I think this will be a test of maturity for the European policymakers.
Mr. Binismaki, when you look at the economy in Europe at the moment, is there a worry that actually because of the legal challenges in Germany that we're not going to see money from the recovery fund soon, and how big of a problem is it for the recovery?
No, I think as the governor of the Bank of Italy was mentioning just before me, the pace of vaccination is the key challenge. Not only because the recovery is linked to vaccination, but also that the slower the vaccination, the higher the risk of variants. If you speak to experts, health experts, this is the biggest risk at this stage, that maybe we have completed the first stage of vaccination and then a variant comes out that destroys your effort. So we need to do it quickly to kill the virus, or to avoid that the virus circulates and give birth to a variant. I think this is the key challenge. I have to say that the recent decision by European policymakers to put age limits is not really going in the right direction of accelerating the vaccine, because it will make it actually slower and is going to actually create some uncertainty, anxiety in population about, in particular, the AstraZeneca vaccine, and maybe possibly the Johnson & Johnson, who is going to arrive in the markets very, very, very soon. So I'm a bit concerned that these uncertainties, these fears at the policymakers level is going to translate into a slower pace of vaccination.
And does that mean that, we could actually, does it derail the economy, or does it just delay it?
Well, we are behind, in continental Europe, we are behind the UK and the US by 2 months, 2.5 months in terms of vaccination. So UK is opening next week. We could say that mid of June could be the same stage in which the reopening in continental Europe could take place in the same context. But if only if the pace of vaccination accelerates, and if not, we may have to go through the summer with an uncertainty about what will be open, how quickly, and that affects the economy, of course, consumption, investment, and so forth.
Great, thank you so much. Lorenzo Binismaki, their Societe Generale Chairman, joining us today. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Barclays says junior bankers should never work after 9 p.m. on a Friday night or early on a Sunday morning, except when they're staffing live deals. The London-based firm says it's reworking its policies with the aim of protecting younger investment bankers' mental health. Amid a boom in deals, Barclays and its rivals have been trying to address increasing burnout among junior staff members. Now, Amazon has taken a commanding lead in an historic election. The vote will determine whether workers at the company warehouse in Alabama will become the first in the U.S. to join a retail union. With about half of the votes now counted, Amazon is ahead by a 2-to-1 margin. The Retail, Wholesale and Department Store Union calls the system broken and says it will appeal. And Abu Dhabi's Mubadala is said to have started preparations for a U.S. IPO for chipmaker Global Foundries. The Sovereign Wealth Fund has been having initial discussions with potential advisors about a listing that could value the business at about $20 billion. And that's your Bloomberg Business Flash.
Leanne, thanks so much. Now, coming up, how worried should Europe be about Greece's bad debt load? Up next, we speak exclusively to the Bank of Greece Governor, Yanis Stornaras. If you have any questions for him, you can IB Plus TV or IB me directly. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
So we just need to keep reminding ourselves that even though some parts of the economy are just doing great, there's a very large group of people who are not. I really want to finish the job and get back to a great economy.
Well, that's his pledge, getting back to the great economy. The dovish tone continues from Jay Powell. The Fed chair rebuts inflation fears, saying he worries more about the rising infections and rising prices. Well, it's a similar view in Europe, where ECB officials have previously said any pickup in the region's inflation would be temporary. Well, joining us now for an exclusive conversation is Yanis Stornaras. He's governor of the Bank of Greece. Governor, thank you so much for joining us today. When you look at some of the debate about the recovery fund and the fact that it could be delayed, we had a pretty stark warning by Isabel Schnabel. Do you share those concerns?
Absolutely. It is a very vital instrument for the recovery of the Eurozone. So if there are delays, I'm afraid our forecast will not be correct. So we must do everything possible so there will be no delays on the recovery fund.
What happens if there is a delay?
Especially countries in the European South that have been hit badly by the pandemic, they need this fund a lot. Well, if there are delays, that means that growth will be delayed, and so the recovery will not be here this year.
Governor, the recovery will not be here and then will be just delayed, or could it actually take a turn for the worse? Like, you know, how bad is the position right now of Europe if there is no access to these funds?
Well, it is bad. In the case of Greece, we think that this recovery fund adds about 1.2% every year to the growth rate. Well, of course, there is an underlying growth rate now coming from the pent-up demand from savings that will be translated into consumption. But the recovery fund has a vital role to play in the recovery of Europe, especially on those countries that have been badly hit by the pandemic.
So, Governor, how has the economic outlook actually changed since the last ECB meeting? Is it worse because of what's happening in Europe, or is it better because of the stimulus in the US?
The news are mixed. I think we are lagging behind the United States in the vaccination. Our fiscal stimulus is smaller than the one in the United States. Of course, the forecasts now are slightly better than before. There is still uncertainty, but not as much as before, because science has won. We have vaccines now. There are some delays in the logistics. The expansionary fiscal policy in the United States also has an impact on Europe. So all in all, I would say we are better than before, but there is still uncertainty. There are certain downside risks.
So we heard, Governor, from Classic Notes saying that the ECB should start thinking about, starting to remove PEP, possibly in the third quarter. Does that seem too soon?
It is too soon. We don't have any evidence that things will turn so benign in the third quarter. What we have agreed in the Governing Council is that we'll do whatever it takes with our pandemic program to make sure that there will be favorable financial conditions. And we're still falling below our inflation targets. We expect some blip in the inflation this year, but for one-off reasons. But the inflation outlook remains still very weak compared to our target. So I don't see any reason why we should withdraw the monetary stimulus we are providing now.
So when do you think is the right time to start talking about unwinding that?
When we have concrete evidence that inflation is coming up. on a sustainable and permanent basis. I mean, the pandemic program runs in principle up to March, but if needed, it can be extended.
Governor, talk to me a little bit about how you see the situation. You know, when you look at investors, they were definitely more optimistic than some of the data that we saw in the economy. And the data now, especially PMI, seem to be catching up with that. So what does it mean for bond buying?
In our view, there was an unwarranted rise in bond yields in February. Perhaps it was too soon. I think investors ran ahead of the economy. So that's why we made the decision in March to accelerate the pace of purchases to affect the yields of the bonds. So it is good that there is more optimism, but we should not rush ahead. We want to make sure that financing conditions remain favorable as far as the pandemic still prevails.
Governor, do you have any concerns that the transition from PEP to APP as a primary tool will actually harm the recovery?
No, I don't have any worries about that. I think our instruments are sufficient now. They have proven their efficiency. No, I don't have any worries, and our monetary stance now is the appropriate one.
Is there an understanding that actually the markets in the U.S. will catch up with reality, or do you still worry about market movements?
What do you mean, catch up with reality?
Well, if you look at the Treasury moves, I mean, there's basically inflation. You know, there's inflation expectation that the market is seeing that the central bank keeps on pushing back against. How will that evolve?
Still, we are not sure that those pressures on inflation will be permanent. So I think it's better to err on the safe side. Don't repeat past mistakes. It's absolutely necessary to keep monetary accommodation in place.
Governor, talk to me about this new tax proposal that Janet Yellen put in place that actually could change the way that everything works around the world. What kind of a difference does it make to the worldwide recovery longer term?
Well, although it's not up to central bank governors to comment on this, I could say personally, and perhaps also using my past property as finance minister of Greece, that I found it a very good idea, and I would prefer to have it on the table much earlier. So better late than never. It's a good idea, and I think my advice is that we must take it.
Governor, thank you so much for your time today. Yannis Stornaros here at the Bank of Greece Governor joining us for an exclusive conversation. Now, coming up with the GameStop saga and the Archegos blowout, 2021 has been a year of risk reappraisal. Danny Berger joins us next to talk about what moves big banks are making, as well as retail investors with the added liquidity of a stimulus check. This is Bloomberg.
is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
What are Americans spending their stimulus checks on? Because this time around, it's not stonks. When the first and second rounds of stimulus first went out, day traders were stuck at home. Dreaming of making a killing, they plowed that cash into the stock market. It coincided with the meteoric rise in influence of Wall Street bets on Reddit and the rise in stocks like GameStop.
What we've seen in the past couple of days, especially weeks after the stimulus checks have hit US bank accounts, is a lack of participation by retail investors into the stock market. So we're still seeing net buying, but just not as much as what we had expected, especially given that this was the biggest fiscal outlay out of the three that we've seen so far.
It's been a few weeks now since the stimulus checks first started going out, and data suggests that the YOLO traders aren't playing this time. Data from Vonda Research, for example, shows that over the past few weeks, retail investor activity hasn't really been remarkable, and that compares to last year when the checks went out and we saw record levels of activity. So what happened? Well, for one, there are just more things to spend money on now. More Americans are vaccinated, more parts of the country are open, so they're just spending money on the real economy instead. Google flight searches, for example, reached peak popularity, suggesting people are spending money on traveling. Or it could just be a case of retail investors licking their wounds.
So we estimate that the average retail investor in the US is actually sitting on losses in the past couple of months, and we probably need to see some of these stabilization in these growth names in stocks before we see retail participation pick up. So just like a normal investor waiting for markets to stabilize, waiting for better conditions to put these stimulus checks to work.
Whatever the reason, that stimmy money, it would seem, has better places to be.
Danny Berger there on how Americans are spending their stimulus checks this time around. Well, Danny joins us now. Danny, does it look like this retail money might actually come back into the market soon?
Francine, I think it's fair to say that it's at least not disappearing. Sure, the levels might be lower than last time when these checks were paid out, but, you know, as Viraj Patel laid out there are a couple of reasons, one just being that they're sitting on losses. Another one to also keep in mind is that when these stimulus checks went out this time around, they did seem to go out in phases. So it might just be a more delayed effect. But I think one of the interesting questions is if a lot of people are facing losses, retail investors, do they end up chasing those losses? Does it end up hurting them even more? So in the couple days since, again, as I laid out there, we're not really seeing that money be put to work. So when it does come back, what will it chase? Or perhaps we'll see that kind of money start chasing more frequently things like Bitcoin, Francine.
Danny, turning to Credit Suisse, the lender is rolling out tighter limits for its hedge fund and family office clients. So what does that mean concretely?
So specifically, Credit Suisse is looking at changing their margin requirements. So it used to be a static requirement. In other words, they'd say to a hedge fund or family office, okay, you give us this amount of collateral and this will give you access to this specific size of position or account. Now it's going to be a dynamic one. In other words, it will change depending on the risk underlying that investment, so be it volatility or concentration in that investment, Francine.
Danny, thanks so much. Danny Berger there with the very latest on the markets. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons is out of New York. We'll have full market movements and, of course, our great interview later on with Richard Clarida. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero-carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
Can't explain Neom on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening. Buses all around you here.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We got a taste of what faster progress will look like with the March employment report.
We really are seeing a lift to the economy that is positive and most welcomed.
We just need to keep reminding ourselves that even though some parts of the economy are just doing great, there's a very large group of people who are not.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Good morning from London, Berlin, and New York. Our top stories today. Paying the price, Credit Suisse tightens the financing terms for hedge funds and family offices following the Archegos blow-up. call it a revolution. A surprise U.S. drive to overhaul international corporate taxation could lead to a new era for governments around the world. And a warning from the ECB, there could be an economic disaster if a legal challenge keeps the European Recovery Fund from making payments. We'll hear from 2 ECB Council members. Well, happy Friday, everyone. We've made it to Friday. We have a long weekend ahead. Kelly, a lot of the focus is, of course, on Jay Powell, basically saying that if inflation runs hot a little bit, and he's not worried about it, but if they do, they have the tools to cope with it.
Yeah, Jay Powell time and again has had to try to talk down inflation fears in this market. But the data we got in China overnight may be stoking those fears once more today. The highest factory price inflation since all the way back in 2018. And that indeed did weigh on Chinese equities today. The CSI 300 was down about 1.5%. You did kind of have a mixed picture in Asia. The Nikkei was fractionally higher, but again, those pricing pressures weighing on Chinese stocks and the Chinese yuan as well, which was weaker against the dollar by about 0.1%. And actually one of the big underperformers in the G10 space when it comes to currencies is the Aussie dollar, which is weaker against the dollar by about 0.5%. As for what the picture looks like in Europe, we are seeing stocks, or of course, this is Asia. Again, we're looking at the Aussie dollar weakness here. If we can flip up the screen and take a look at what is happening in European equities, we, of course, had a fresh record high on the Stock 600 yesterday. Will we see another record today is the question. We were just fractionally higher last that I checked. Of course, we are seeing with those inflation fears, bond yields moving higher around the world, and BTP is taking another leg up after a new headline we just got out of Italy. The 10-year BTP yield up around 4 basis points, now sitting at 70 basis points, and the pound weaker against the dollar for a 4th day in a row. Of course, it is broadly a dollar strength story up against everything in the G10 space. And as for what the picture looks like with other U.S. assets, it could be a bit of a mixed open, fractional moves. It has been a very, very quiet week, light volume. It looks like that could be the case today, with S&P E-mini futures up just a measly 3 points. I would point out the VIX, though. Yesterday, the volatility equity fear gauge closed below a 17 handle. We are right at 17 right now, but again, that speaks to the calmness that is in the equity market. Will it last, though? Some people are betting that it won't. And again, the action really in the bond market. 10-year yield or 20-year yield is what I wanted to talk about. I usually don't talk about this duration specifically. It moved lower by 7 basis points yesterday on some speculation that the Fed was going to boost purchases of those bonds. Today, though, with that broader sell-off we are seeing in bond markets, the 20-year yield up 3 basis points at this point, Matt.
Yeah, there's a big short interest, actually, in 20-year plus duration ETFs. So definitely something to keep an eye on, as well as that story that just crossed, Mario Draghi bringing forward $48 billion in new borrowing for Italy. I want to take a look at what's going on today, what you need to write in your calendar. At 8 a.m. New York time, we're going to have an exclusive interview with Federal Reserve Vice Chair Richard Clarida. Definitely something you want to keep your eye on if you're watching rates. At 8:30, we get the U.S. Producer Price Index for March, also something to keep your eye on if you're watching rates. And then later today, President Biden plans to release an outline of spending priorities, including the amount of spending he's going to do on defense. A lot, really, to affect the rates market today. So very interesting with the yield that Kaylee brings up there, especially in the long end. We're going to see if the bond vigilantes come back, Francine, and start to push those rates higher.
Yeah, yesterday it was really interesting listening to Jay Powell basically saying, guys, get vaccinated. That's the only way the recovery takes place. And then, you know, we also spoke to 2 European central bankers, and they were kind of going the same way. It's like they're taking the role of Dr. Fauci now, saying, get vaccinated. It makes my job as central bank easier.
Yeah, I'm waiting for them to say something that I find really interesting, because it seems like everything they say is what I expected them to say, and it really hasn't moved the needle this week. The volatility has been so low, and I feel like the spring is compressed. As soon as a central banker makes actual news, maybe we'll see it expand.
Yeah, I think that's what we like our central bankers to be, is like stable. And so sometimes not as exciting as other parts of the markets. As Credit Suisse, for example, that's certainly exciting, rolling out tighter financing terms for hedge funds and family offices in the wake of the Archegos capital management collapse, which cost the Swiss bank $4.7 billion. Now, earlier, the Societe Generale chairman, Lorenzo Binismaghi, told us on Bloomberg that risk monitoring should be tightened.
I think that you need some institution to put their house in order. It's a question of willingness to take risk that is not comparable, at least seen from continental Europe. This is, or at least the European Union. This is not, it's difficult to understand.
Well, with us now is Bloomberg's Wall Street reporter Sonali Basak, who broke the story yesterday on Credit Suisse. Sonali, thank you for joining us. There seems to be more and more, concern that some of these smaller European banks are basically taking on too much risk to try and compete with Wall Street. Will they be regulated?
It's a great question, Francine. You know, one of my sources pointed out that really some of the Swiss banks were really at the heart many years ago of the LTCM debacle as well. So some of this feels to people like history repeating itself. On top of that, there was a lot of talk about the industry self-regulating itself, and is it enough? This is really just the first set of shockwaves across the hedge fund industry. For other hedge funds to be called by Credit Suisse to say, listen, we're changing our terms, but they weren't involved in Archegos. But really what's happening here is that dynamic margining that Danny Berger was talking about a little earlier in your show. That dynamic margining is just not going to cut it. The question is, these are margin terms changing on swaps, which are already very loosely regulated relative to other types of margining, and it would also require such little disclosure. The question now becomes, are margin terms going to tighten across more products, across more banks, and are disclosure rules also going to change, which would be a much tighter environment for the hedge fund industry and family offices in a much more significant way.
All right. Sonali, thanks very much for joining us. Sonali Basak, been covering this with the Bloomberg team for the last couple of weeks. Exceptional journalism. Elsewhere in the markets, we are seeing some interesting options activity in the VIX. One trader making some big bets that this period of calm is not going to last. With us to explain is Danny Berger. Danny, how significant a bet are we talking about here?
Matt, it's significant because the market is not trending that way. Like you said, it's boring. Everything is boring. The VIX isn't doing anything. I mean, look, it is at a nearly one-year low at this moment at 17 flat on. That's going to make it at the lowest since February of 2020. But yesterday, someone went into the market and bought 200,000 contracts on the VIX. Those were call options, so betting that volatility will go higher. To show you the significance of it, let me take you into the terminal so you can look at the volume picture. This was enough to really boost up volume at the end there to the highest since last summer. Of course, what was going on last summer? We had the real volatility seeping into the market because of the coronavirus pandemic. But the VIX index tends to be mean reversing. It needs typically some sort of catalyst, which could be taxes. It could be resurgence of different variants of the coronavirus. Either way, someone is making this bet that it's going to be somewhere between 25 and 40% on the VIX. Often with these things, it's not necessarily a question of if that's right, but when that will be right, Kaylee.
Yes, so many questions I have about the VIX right now. 17 handle. I didn't think I would see that ever again, honestly. Bloomberg's Danny Berger, thank you so much for joining us. And I do want to take a look at some stocks moving in pre-market trading, specifically a number of biopharma companies. Therapeutics MD is surging 21% after it got approval for one of its drugs in the UK and Belgium. You also have Greenwich Life Sciences higher by about 6%. That stock was actually touted on Reddit, saying there could be some positive data today coming out of its breast cancer drug trial. Humanigen is also higher by about 6% before the bell. One stock, though, absolutely plunging is Provention Bio, down 40%. The FDA pushing back on one of its drugs that it had applied for to treat diabetes. The FDA saying they have identified deficiencies that preclude discussion of labeling the drug. So that stock down a whopping 40% before the bell, Francine.
Yeah, thank you so much, Kaylee. I mean, I don't find anything boring. We had like Greensill, and we had Archegos. We actually have quite a lot of movements with Treasury, so I'm not sure where the boring part. Debate right here on Bloomberg Surveillance, the early edition. Coming up next, never boring, Alberto Gallo, Algebra's portfolio manager. We'll talk about the forever, of course, QE that he's been talking about for years. And then a little bit later today, an exclusive conversation with the Federal Reserve Vice Chair. He's Richard Clarida. That's at 8 a.m. in New York, 1 p.m. in London. and this is Bloomberg.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
Got a taste of what faster progress will look like with the March employment report. Close to 1 million jobs, particularly if you add in the revisions for January and February. And we want to see a string of months like that so we can really begin to show progress toward our goals. The recovery, though, here remains uneven and incomplete.
All right, so Fed Chair Jerome Powell speaking on an IMF panel yesterday. He is positive about the recovery, but he's going to continue to support it in order to fix the labor market. I want to show you something that may throw him off guard a little bit. It certainly did with markets overnight. China's producer price index jumping to the highest level that we've seen since the end of 2018. The interesting thing about this is in the bottom panel of the chart, you see the Citi Global Inflation Surprise Index. It's also rising higher, almost correlated, and it's interesting because we're talking about inflation surprise, not inflation expected. And I think we all expect some kind of inflation, Francine, but if it's higher than the street anticipated, like we saw in China, that could really move markets.
Yeah, it could. Maybe we're importing inflation, or the U.S. could be importing extra inflation from China. Joining us to talk about the inflation conundrum is Alberto Gallo, portfolio manager and head of macro strategies at Algebris Investments. Alberto, thank you so much, as always, for joining us. When you look at the inflation, right, so the Fed, the ECB say any kind of inflation will be transitory. What if there's inflation coming from elsewhere that we haven't priced in or that we're not seeing yet?
That's right, and we see a lot of new sources of inflation because the supply chains have been disrupted. For example, some of the Taiwan manufacturers of microchips used in anything from desktop computers to cars are going to raise prices by as much as 25% next year. On top of that, the shipping supply chain has been disrupted. So we do see more sources of supply-driven inflation over the coming months, which are going to bring the U.S. level of inflation, more persistently above 2.5%. And that is something that's not completely priced in the bond market, especially in the U.S. bond market. The European picture is very different. We still have relatively low fiscal stimulus, low inflation numbers in Europe, and that's going to be the case for a while. So, but there's going to be more divergence in the U.S.
Right, but so what kind of divergence will we see in the U.S.? What are you seeing treasuries by the end of the year?
We do see treasuries going towards 2% on the 10-year tenor by the end of the year. Generally, though, the more important development that we have seen is that the correlation, the movement of treasuries versus risky asset is now positive. So they move in tandem. And that presents a very big hurdle for portfolio managers because, in the typical 60-40 portfolio, you would put some treasuries to compensate for your risky assets. This no longer works or no longer works as well. So you're left with navigating markets and constructing portfolios without a safe haven. And you need to find new hedges, new risk-free assets for your portfolio.
The MLive blog this morning, Alberto, was talking about huge short interest in the 20-year plus ETF. So longer durations, people are betting against them. Do you think interest rates there are going to soar again? Are the bond vigilantes maybe coming back?
We have been underweight duration, especially since last year. As we get closer to 2%, what we're really worried about now is not so much just government bond yield, but the complacency that you're having across all sorts of other asset classes. So, for example, U.S. high yield, has got a lot of weak companies, and it is trading at the lowest, close to the lowest spread on record compared to treasuries. So, if treasuries go up a little bit more, then why would you buy high yield bonds at 4% if with a 10-year treasury at 2%, for example? So, we might see a tightening in financial conditions, even though the Fed is very dovish, because investors are very complacent. They're very long on bonds, they're very long on credit, they're also very long on some parts of the equity market. So we see the market as very complacent now, and we are worried about a return of volatility as we go in the second half of the year with macro data, the best macro data behind us, and central banks being not as dovish as they have been.
We're talking about today, and actually clients are clicking on, it's the second most read story in the last hour, this big options bet in the VIX that volatility is going to come back. It's been very complacent, surprisingly so at 17, as Kaylee pointed out. Would you be surprised to see it jump above 25 or rather all the way up to 40 by July?
So what happened in the post-QE period is the distribution of volatility is become very polarized. So essentially, when it's bad weather, it no longer rains. It's a hurricane. So we've seen VIX staying below 20 for a long period of time, but then when it goes up, it goes to 30 or 40, like you said. So we could see, we do see current levels of volatility in the VIX and credit spreads in particular as too low compared to some of the headwinds that economies are facing, including the vaccine distribution in Europe, which remains very slow. So we see the market today being very numb, very complacent. Idiosyncratic events like Archegos or Credit Suisse have not moved credit spreads. Macro events like the delay in vaccine supply in Europe is not moving the market. This is a sign of complacency in our view. So we could see volatility coming back up in the second half of the year. That's our view.
Alberto, what do you do with some of the European yields? So unclear exactly, when PEP will start to be unwound. There's a governing council that's definitely not on the same page. And then now you have also a possible postponement of the recovery fund, which would really put Europe in trouble.
The European yields are, within the context of global reflation and rising treasury yields. Europe is behind on fiscal stimulus. The French Finance Minister Le Maire was voicing about delay in the deployment of the recovery fund the other day, and also the vaccine deployment is very slow. So for fixed income investors, Europe is still a place to hide, but let's remember, yields are very low. BDP spreads are at 100, close to record lows. There is very selective areas in credit where we can still find value. But even in Europe, we have to be a bit more careful. But yeah, within the context of rising global yields and potentially less dovish central banks in the second half of the year, the ECB will need to keep the foot down on the accelerator. And when the ECB wants to talk a bit hawkish, we think it is to prevent the market from becoming completely addicted to their stimulus, but they will remain dovish. They have no other choice, as governments have remained very slow on fiscal stimulus in Europe and on the vaccine deployment.
Alberto, thank you so much. Alberto Gallo, their portfolio manager and head of macro strategies at Algebris Investments. Now, coming up, we'll continue a conversation with the Federal Reserve Vice Chair, Richard Clarida. He'll be on with Tom Keene and Jonathan Farrow, Lisa Abramovitz at 8 a.m. in New York, 1 p.m. in London. And this is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Farrow, and Lisa Abramovitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg First Word News, and most coronavirus vaccines are going to the wealthiest countries. Now, so far, 40% of the COVID vaccines administered globally have gone to people in 27 wealthy nations that represent 11% of the population. Now, that's according to a Bloomberg vaccine tracker. Countries making up the least wealthy 11% have gotten just 1.6% of the vaccines. In other news, countries with the highest incomes are vaccinating 25 times faster than those with the lowest. Now, France's Finance Minister Bruno Le Maire says that what's on the table is a real tax revolution. Le Maire was talking about the increasing prospects for a global minimum tax for business. This week, Treasury Secretary Janet Yellen outlined a surprise U.S. drive to overhaul international corporate taxation. Now, that could break an impasse among 135 countries that have been trying to come up with a deal for years. And Barclays is joining the ranks of those firms trying to make things easier for junior bankers. Now, the British bank now says that analysts and associates should not be working from 9 p.m. Friday to 9 a.m. on Sunday, except when unavoidable. Barclays also says its youngest employees are expected to take 2 5-day vacations a year. So generous. Matt, you do kind of forget how, hardworking some of these junior bankers are when you said you can take off basically a day and a half at the weekend.
Well, I think, though, they've always been this overworked. That's part of the job. The difference is, and I'm hearing this from a lot of bankers who had to do the same thing, because of the pandemic, they don't get to go out with their colleagues and blow off steam at the pub for a pint after. There's not that camaraderie, that collective misery that makes it all easier to deal with, and that's why it's so difficult.
Yeah, it changes everything. Now, coming up, we'll talk about foreign exchange with Elsa Lignos, RBC Capital Markets Global Head of FX Strategy. We talk dollar, we talk pound, we talk Turkish lira. This is Bloomberg.
Joint Politics ist ein überparteiliches Startup, das nach politischen Talenten sucht und sie fördert, um Lösungen für die großen Fragen unserer Zeit zu entwickeln und diese auch politisch umzusetzen. Wir glauben, dass die Förderung von politischen Talenten mit guten Ideen wichtiger ist denn je zuvor. Wir sehen auf allen extremen Enden laute Stimmen, die polarisieren und die Menschen auseinanderbringen. Und wir wollen die Personen fördern, die wirklich konkrete Lösungen entwickeln und für die Mehrheit der Gesellschaft einen Weg aufzeigen in eine positive Zukunft.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, I don't know if there's a lot going on in the markets, Matt, but there's certainly all these stories that have been rumbling on. We look at Archegos, we look at Credit Suisse, we also look at the global tax regime that could change, but we don't know what kind of timeline. And then we look, of course, at the inflation debate with Jay Powell.
Yeah, well, the inflation story is definitely alive and interesting because of what we saw in China overnight. As far as Archegos, it was fascinating for a couple of weeks. I'm ready for it to be over, though. I'm not really getting any new news out of Archegos. Yes, I'm sure they're definitely ready for it to be done. What I think really is interesting is this VIX story. You know, Kaylee was mentioning she never thought she'd see VIX 17 again. There's so much complacency in markets and central bankers. You know, we could write the speeches. We know exactly what they're going to say, and they do it. At some point, something's got to change, and as Alberto just told us, you know, the VIX is going to shoot back up.
Yeah, and Kelly, is that playing out in the, at the margins in the markets even today?
Well, if something's got to change, nothing is changing today. It's been one of those weeks, and it's one of those Fridays. There is just not a lot going on. We are looking at moves, I'm talking fractional on both sides of the Atlantic. The Stock 600 just off its record highs, but we're talking 1/4 of a point here in the U.S. Futures are pointing to a record open for the S&P 500, but it's a move of just 4 points. So things are very calm. Again, VIX 17 handle. There is not a lot of volatility out there right now. A little bit more interesting, though, when it comes to the bond market. Matt was just talking about that inflation in China, maybe some renewed concerns that China could export that inflation, and 10-year yields as a result moving up 4 basis points at this point. We're sitting just around 1.65, 1.66%. And the dollar gaining back some strength. It was on pace for its worst week of 2021 thus far, but right now it's stronger by about 1/4% up against everything in the G10 space. As for some stocks that are moving before the bell, what you should watch come the U.S. Open in 4 hours' time, Levi Strauss up 3.5%. It beat on revenue and lifted its forecast. Apparently, there's a lot of pent-up demand for denim. Who knew? Upstart is also higher by 3%. QuantumScape up by 2%. That bid into clean energy stocks really just continuing. And Fubo, this is a fun one, Matt. It has gotten exclusive streaming rights to some of the qualifying matches for the 2022 World Cup in Qatar, agreements with the South American Football Confederation. So those shares are up 6% before the bell, Matt.
All right, really interesting stuff. It's going to be a hot World Cup, I think, that one in Qatar. Although they race MotoGP there, and it's fine because they do it at night under the lights. I have a chart here that just serves to support my love for the baby boomer generation. I don't know why they get so much hate. They brought us such great music with classic rock. They brought us free love. And then later they brought us yuppies and really cool movies about Wall Street. This rally that we're looking at, we're almost double what we were at the bottom, and it's got a lot of legs, according to Wes Goodman from the MLive blog. He says the reason is you thought baby boomers were going to buy bonds. Well, they didn't. They've been buying equities like crazy, and now that generation owns 30% of corporate America. Now central bankers like Jay Powell can't afford to let them down. The Fed has to support a continued market rally in order to keep the baby boomer generation, solvent. And so, Goodman says, this market rally has a lot longer to run. Francine?
I love the boomers, and also their parenting style was actually so lax, Matt. It's amazing that we made it, alive, really. They were very, very, at least mine were very relaxed about parenting.
My parents were totally cool. I was allowed to do whatever I wanted, and it almost ran off the tracks. I just barely caught the curve, but I enjoyed it.
There you go. Baby booming parenting, like an essay on that. Now, Euro area leaders are growing concerned about the pace of the bloc's economic recovery. Earlier today, I spoke exclusively with the governors of the Bank of Italy and Greece.
It is a very vital instrument for the recovery of the Eurozone. So if there are delays, I'm afraid our forecast will not be correct. So we must do everything possible. Well, of course, there is an underlying growth rate now coming from the pent-up demand from savings. that will be translated into consumption. But the recovery fund has a vital role to play in the recovery of Europe, especially on those countries that have been badly hit by the pandemic.
The global economy is starting really to recover. And secondly, however, that this upturn remains fragile, which is subject to a very high uncertainty, especially related to the uneven pace of vaccination across areas, countries, regions.
Well, joining us to talk about FX, to talk about Europe, is Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets. Elsa, when you look at some of the concerns, it's basically that the recovery fund will be delayed yet again. Does it mean that the recovery will be pushed back well into next year if that happens?
So it's not the recovery fund that I think concerns most people, but the pace of vaccination that Governor Stornaras touched on there, and the fact that the euro area has been slow getting started. I speak to a lot of investors who now say, well, the hurdle for good news in the euro area is very low, and surely that means we're due a bit of a bounce. And that's true, the hurdle is very low, but we're not quite seeing that pickup in positive vaccination news just yet. So if you look at the gap in vaccination between the euro area and the US, for example, it's certainly not narrowing the way euro area leaders would like.
Elsa, we have been showing over the past couple of days this insane euro sterling chart where, you know, the pound was just gaining. I make this motion because it goes down in the pair in that order on the chart. But all of a sudden, over the past few days, when the AstraZeneca news came out that kids under 30 would no longer be able to get it, you saw a real turnaround. Here's the chart. Fantastic job in the control room there. I wonder how much you think this is linked to the vaccine. I mean, we're starting to get some good news, as you point out, around Europe because it can't get any worse in terms of vaccines. And the UK is kind of tapering off in terms of the rollout. Is that great for the euro, bad for the pound?
Well, I don't know that it's great for the euro, but definitely in a relative sense, you're seeing a narrowing there. And I think the other thing that's incredibly important to mention is just really the role of positioning. And I know people struggle with positioning in FX because obviously it's very difficult to get hard, solid data on it. Our quant trading team at RBC actually does a fantastic job on this. And we've seen a lot of interest from clients in the past week with our AMOS positioning monitor because Euro sterling, one big one. CAD is another one. Long CAD positioning, definitely out there, and a lot of that's been getting squeezed this week. So CAD yen, CAD Swiss, Euro CAD. And if you look at the buildup of positioning from the start of the year, what we've seen in the last 48, 72 hours is really just an unwind of some of those longs.
Well, speaking of positioning, Elsa, we've seen a lot of the short positioning on the US dollar unwind, is that we had that really incredible, surprising strength in the first quarter. Is that going to be over now?
You know, I think from the dollar's perspective, we started this year in a very small minority looking for dollar stronger. And that's certainly much less lonely a place to be at the moment. So I think going forward, the gains for the dollar are going to be more modest because you're not building up on that, you're not facing that wave of shorts that's already out there. I think positioning is a lot more neutral. But a lot of the fundamental factors that we pinned our dollar call on for 2021 are still very much intact. So the cyclical outperformance of the US economy and the fact that I think it will translate into a stronger currency, I think is a theme that you can run with for further.
We had a Chinese factory price surge, Elsa. How does that translate into your inflation forecast, but also renminbi?
You know, so I think from the renminbi's perspective, it's not so much an inflation story or kind of conventional monetary policy the way it might be in G10. We are really looking for inflation to show up everywhere just on base effects alone. And certainly in G10, that will start playing into the policy considerations for certain countries. For China, I think we're much more focused on the credit impulse and the fact that, not so much openly, but behind the scenes, you're certainly hearing stories that banks are being asked to rein in credit, and you may well see a much more negative credit impulse there going forward.
One thing I've noticed is the incredible strength of the dollar versus the yen, and I wonder if it's overdone. Right now, a U.S. dollar can buy almost 110 Japanese yen. Does that make sense?
Thanks for asking that question, Matt. It's almost like you set me up. I think that's one place where I would look for dollar weakness to fade quite a bit. And it's because the yen position out there is pretty crowded. A lot of people have that short on, just as a direct effect of higher US yields and, you know, making drawing the conclusion that the yen necessarily has to weaken. But what's interesting is that if you look at the way the yen has traded historically, it tends to take its signal much more from what happens at the very front end. And even though the forward curve is beginning to price in tightening for the Fed in 2022, it's still very modest. And I do think as the year wears on, a lot of these yen shorts are going to kind of throw in the towel, and you may well find the yen is one of the kind of shock out performers as the year goes on.
Elsa, thank you so much. Matt Miller set someone up. Elsa Lignos, Global Head of FX Strategy at RBC Capital Markets, joining us today. Now, coming up, Amazon far ahead in the historic union vote. What to watch as the count continues today? That conversation is up next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is Bloomberg Surveillance, early edition. I'm Francine Lachman in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Amazon has taken a commanding lead in a historic election. The vote will determine whether workers at a company warehouse in Alabama will become the first in the U.S. to actually join a retail union. Now, down by a 2-to-1 margin, the union has called the system broken and says it will appeal. Well, joining us now is our Bloomberg editor-at-large, Marty Schenker. Marty, this is an amazing story because it's not really about Amazon and Alabama. If this goes through and there's a union, then this could reshape the way that we actually see and pay all of our gig workers.
Yeah, it's considered a landmark decision on the part of the workers, but it does extend beyond Amazon to the gig economy, as you mentioned, Francine, and it looks like the union's headed for a loss.
Which is incredible, especially if you're sitting here from Europe. So why would it be a loss, actually? What's the reasoning behind that?
Well, I mean, we have reported that, and Amazon has made the case that paying $15 an hour to entry-level workers at that warehouse is double the national minimum wage. And in fact, in Bessemer, Alabama, where this warehouse is located, that goes a long way. And we've reported that a number of the workers there were very concerned about whether the union vote was going to challenge that.
There's reason to believe, and maybe it's just because Biden won the election and Democrats narrowly control the Senate, that America is becoming more progressive, Marty, in the way we treat our workers. We care about equality. We're concerned about, the K-shaped recovery. On the other hand, you consistently see voters going the other way on specific issues. For example, in left-leaning California, they voted against essentially gig workers and didn't allow them the same kind of benefits that regular salaried employees have. Why is that?
I mean, I think it's a local issue. At the same, and all politics is local, as you know, Matt. At the same time, you had Florida voters voting to increase the minimum wage in a Republican state. So it really depends on the specific issue, but it is clear that the gig economy is causing a tremendous amount of attention on union and unionizing. And this administration, and Joe Biden specifically, is very supportive of unions. So this, if it is a defeat for the unions, is not the end of the story.
Yeah, and of course the Biden administration not only is pro-union, it also is thinking about a number of different changes that could affect companies, including to the tax code, not just here domestically with a potential raise in the corporate tax rate to 28%, but also this global minimum tax of 21% for corporations. What is the likelihood that other countries are going to sign on to that, especially the smaller ones?
When Janet Yellen put this proposal on the table the other day, many people said, well, this is going to be so complicated and so difficult, it's going to take years to accomplish. But then again, you did get a lot of very positive comments coming out of Europe. The OECD is working on a plan that they're supposed to deliver in the summer. It is extraordinarily complex when you think about every country's tax system and harmonizing it. But certainly the mood music is positive. We may actually get an agreement sometime this summer.
Marty, on to one of the other big issues for the Biden administration is how to deal with the border and also these, frankly, horrific and chilling videos that we've seen of children being abandoned at the border.
Yeah, this is sort of a hidden problem and a very serious problem for the Biden administration, which they are struggling to get out in front of. There's no question that border crossings, illegal border crossings, have increased dramatically since his inauguration, and the messaging coming out of the Biden administration is not great in terms of how they're going to deal with it. Most people just don't get how he's going to approach this problem so that it doesn't represent a threat to him politically.
Marty, thank you so much. Bloomberg's Marty Schenker, they're our editor-at-large, of course, covering a number of stories for us. Now, coming up, the former Treasury Secretary, Larry Summers, says Biden's infrastructure plan could have a much bolder vision. More from our interview shortly. This is Bloomberg.
reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
What's most important is that we make the investments as a country that we need to, not what we call them. We need better bridges. We need to expand broadband. We need to build more schools. We need to make sure there's adequate housing for low-income families. The semantics really aren't so important. Frankly, I'd have liked to see more traditional infrastructure in this package because I think we're decades behind, and I'm not sure this is big enough to bring us to the forefront, and I'm not sure there's enough really major, large-scale projects. There's $80 billion to help Amtrak's operating budget, but there are no major new systems. So I'd have liked to see a bolder, bigger vision on infrastructure. And the other thing I'd have liked to see, David, is more discipline. Discipline to make sure we procure in a cost-effective way. God knows the First Avenue subway in New York costs 7 times as much per mile as the subway in Paris, and they're not especially efficient in Paris. I'd have liked to see more speed in implementation.
Well, for more of that interview with Larry Summers, beautiful background. Catch Wall Street Week tonight at 6 p.m. in New York, 11 p.m. in London. Now, Tom Keaton with an interesting background. Not as nice as Larry Summers, but also surveillance background. Co-anchor of Bloomberg Surveillance. He joins us now. Tom, I'm really excited about your conversation with the Fed Vice Chair, Richard Clarida. Also excited about Angus Deaton coming up.
Well, yeah, it's going to be very interesting. The Vice Chairman with us here, and of course, he is the monetary axe among the leadership at the Fed. I'm going to go back to Gally Gertler and Clarida from the 90s, the science of monetary policy. I know John Farrow's got some questions to really drive forward the immediate science of what this Fed will do in this boom economy. We'll also talk to Richard Clarida about his very close acquaintance with the late Robert Mundell.
Yeah, you're also focused on FANGs, Tom.
Well, I'm focused on FANGs today. Let's go to the chart, if you would. And finally, this is a story of the week, Francine. They have reaffirmed themselves, I should say, coming off a long-term moving average. This is 5-year chart. We're very fangy on a Friday.
Yeah, fanging and Richard Clarida. What's not to like? I'm looking forward to Bloomberg Surveillance. Tom Keane there, co-anchor of Bloomberg Surveillance, joining us. Now, here's a look at what else we're watching. And Kaylee, I know you're watching the Biden administration.
Yeah, we're going to get his budget overview for 2022 later on today. This is just the preliminary view of it, what requests he's making for discretionary spending across all the different branches and agencies within the government. Purportedly, according to Bloomberg's reporting, he's going to request $715 billion for the Pentagon, so that would be a decrease in defense spending. But we're not going to get any kind of details on revenue, on taxes, or on the debt. All of that will be coming with the full budget later this year, but still an interesting thing to watch today, Matt.
Yeah, definitely fascinating to watch. Also, I've been banging on about this for the entire program, but the options bet that we saw, I think, was pretty incredible. This chart shows you total option volume on the VIX in white and call option volume in blue. Move your cursor away from that title because it's so great. Worry walks beside me. In any case, what we're seeing is a soaring of call option volume on the VIX, contributing to a total option volume that's gone back to the records at the beginning of the year. So maybe we'll see this spring finally sprung.
Worry walks behind me. That should be my title looking at COVID, actually. So here in the UK, we're reopening the economy on Monday. A lot of people are worried. I'm like, can't get too close to people, constantly hand washing. So that's the worry that follows me. But they're also, in a month's time, Matt and Kaylee, trying to figure out whether the UK or the Brits, who are getting vaccinated at record speed, maybe just slightly behind the US, can then travel abroad for their summer holidays.
Well, and I'm trying to figure out if I can travel abroad for my summer holiday, because I'm supposed to be going to Ireland in July, and I still have my fingers crossed that that's going to happen, but I also still haven't booked my flights because I'm too nervous about it, Francine.
Yeah, I mean, I
hope
wonder
you,
whether we
I hope
did
you
see
get
a
to go.
Thank you. Me too.
We saw, I think, a big explosion in booking tickets from a lot of the low-cost airlines, and I wonder whether, you know, when these rules that here in the UK should be a little bit more stern in a couple of weeks, whether we get that, you know, huge increase again, Matt.
I have booked 3 separate flights to Mauritius. I got that for my wife for Christmas, and I keep having to cancel, or the tickets keep getting canceled on me. In any case, an exclusive interview with Richard Clarida coming up that you don't want to miss. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also, like, you know, we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, you know, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our 2 main hubs, but across the region.
You are going to see rates move higher. The economy is about to accelerate.
Whether there's an uptick in inflation, cyclical, structural, to be determined, but the debate has changed, and that matters.
There are several forces at work here that are slowing down the recovery of the world economy.
As the market rallied, you started to see volatility climb again. That's typically not a great sign.
There's kind of still this catch-up that's happening in correcting for the COVID shock.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is the NASDAQ comeback from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on Bloomberg Television alongside Tom Keene. I'm Jonathan Farrow. Lisa Abramowitz back with us on Monday. Tom, it's been 6 months of relative outperformance for small caps, for value over growth, for small over large, and now that's flipped big time in the last couple of weeks.
You had to write the year-end review about 3 times as we launch into April, John. It's really, really important to see what the FANG distribution's doing. James Suva over at Citigroup published bullish this morning on Apple. He reaffirms $150 price target, and maybe that's just a microcosm of this understanding in a boom economy, these will be revenue generators.
Off the March 8th low, we've seen a 12% move on the NASDAQ 100, a similar move on the Apple stock as well, Tom. We've rallied on anticipation in the cyclicals and the small caps, in anticipation of better economic data. And as we realise that economic data, Tom, it's interesting to see that rally stall. It's interesting to see what's happened in the Treasury market as well. Stability in and around 165 on 10s over the last month too.
Yeah, I wouldn't call it static. I like your word stability, John, and that across assets we've seen a very stable week. What's interesting is with the navel gazing of the World Bank, the IMF, our important conversation with the Fed today, all of this is a backdrop of a boom economy which is being repriced in one area, stocks.
Well, let's whip through the price action and then get to the day ahead, the morning ahead. Let's start with the equity market. S&P 500 futures right now up 4. We advance 0.1%. The NASDAQ a little bit softer. The NASDAQ 100 down around about 19, 20 points at the moment. In the bond market, repricing at yields higher, up 4 or 5 basis points on 10s, but still in and around 165 at 166.38. And take a close look at Europe. Euro dollar 118.91. Euro coming at about 0.2%. But Tom, Euro sterling in the last couple of days could smell the scent of the turn. The scent of the turn in the vaccination rollout in Germany specifically, and those numbers are getting better and better coming off the back of Easter, Tom. An improvement in Europe, we needed to see it. We're starting to see it.
Some people out front on this, a major shout out to George Saravelis at Deutsche Bank, their FX axe, who I think really was out front on saying, look, it's grim. Mr. Macron in lockdown, Italy in lockdown, Merkel challenged as well. But as we get into April, it's gonna get better, and it is happening right now.
You see it in the FX market too. I'm going to talk about the numbers a little bit later in this hour. We need to talk about the morning we have lined up for you. Headlining that morning at 8 a.m. Eastern time, at about 2 hours from now, Tom Keene, we catch up with the Federal Reserve Vice Chair, Richard Clarida. Looking forward to this conversation on a really interesting, not just a year ahead, Tom, not just a cycle. We've got to talk about the next couple of weeks. We get that first CPI print next Tuesday to show inflation picking up as those base effects kick in.
What's important on this, John, is what's important here is the academic from Columbia is the lead axe on monetary theory, monetary policy at the Fed. He's someone that Jerome Powell has to theoretically listen to. And to me, the nuances Michael McKee has highlighted here is they're really trying to get out to after the fact. They need to see the final evidence before they act. How do you do that without market reaction?
Outcome-based, not forecast-based. Tom, here's one for you. Do we play the transitory drinking game in 2 hours' time? Live on Bloomberg TV
John,
and radio. We're going to do that?
John, we can do the transitory drinking game with one Anthony Crescenzi.
We can do that right now. Tony Crescenzi joins us, PIMCO Portfolio Manager and Market Strategist. Tony, great to catch up, sir. You've called it the great head fake, the great inflation head fake of the next couple of months. Can you walk us through it?
Well, the inflation rate, because of a decline in prices that was seen last year after COVID hit, that decline will be met by a year-over-year gain, we think, in the Consumer Price Index, the CPI, not the PCE that the Fed targets, of 2.2% or so, up from the mid-ones that we've seen of late. But then we see it by year-end moving down back to 1.7% or so. It'll climb, we think, by the end of 2022 to 2.2. Now, the significance of that in terms of Fed policy is that a 2.2% CPI at the end of next year probably means a PCE, personal consumption expenditures deflator, of something less than 2%. Now, the Fed has said it won't raise its policy rate until the inflation rate has been at 2% for about a year and shows signs of accelerating to above 2% for some time. And so the market now, looking at Eurodollar futures for December 22, they're priced today for the Fed to raise its policy rate by a full quarter point by the end of next year. So we would say that it's highly improbable and that more likely the first rate hike occurs somewhere in the end of 2023. So there's some value to be harvested in the front end of the yield curve for the bet that the market is making on the Fed moving early.
Sounds like you're in line with the Federal Reserve then and their outlook, Tony, that the next couple of weeks, next few months is going to be a head fake, that maybe you choose the word transitory. As for substantial improvement, progress towards their goals, do you think they need to define that? Is that necessary?
Yes, it is, but the markets will define it for themselves. But the type of improvement that's a little bit more vague and will be more difficult to discern this idea of a broad and inclusive gain in employment. It wants maximum employment, as it stated August 27th of last year in its long statement on longer run goals and monetary policy strategy, that the pursuit of maximum employment is a broad and inclusive goal. This likely means a jobless rate of under 4%. Keep in mind, by the way, even after last week's strong jobs report, it still remained about 8 million people unemployed relative to pre-COVID. So there's a long way to go on that front. And to define broad and inclusive, it means more women in the workforce, more minorities, et cetera, et cetera. That'll take some time. And this is why that December 2022 view is wrong-headed.
Anthony Tom King, good morning to you. I was just reading last night, light reading, Steiger.